Welcome everybody to our Leaders in Housing Counseling call and our marathon weekly calls now in the world of COVID-19. Thanks to everybody for what you're doing. I know you're doing great work. I am hearing powerful and important stories from you and from people you work with. So we're proud of everything for all the great work you're doing and really glad you're where you are and realize it may not be ideal, but you're in a very important place that's really helping people get through one of the most difficult times in our country. So big thanks on that. We're going to dive right in because we have a lot to cover, and we're going to do, Melody has been deeply at work on the Hill on lots of important congressional work, and I think there's interesting opportunities here. We're pleased with it. She'll give a full report. I'm going to have a very short update on certification in the NOFA, and we've got some news now on servicer communication channels, so we want to share that with you. And most of the call will be hearing from the servicers and how they work, how their systems are working. We had FHFA and Fannie and Freddie on a couple weeks ago about the way the system should work and the kind of the highlights. And now we're really connecting with the practitioners about what it looks like on the ground. So there'll be special emphasis. We're especially interested in those parts that weren't covered by the CARES Act. So things around portfolio loans, especially banks do, and that they keep on their own books, and private label security mortgages, typically the subprime loans, but outside of the regular Fannie Mae, Freddie Mac, and FHA, VA, USDA kinds of loans. And so we have four prominent servicers who are going to give us their viewpoint. They cover different parts of the industry, so it gives us a broad spectrum. And we will spend most of the call on that and be prepared to shoot your questions to the chat box, so we can, I'm sure there'll be lively sessions on that altogether, and we'll do a quick touch on the NHRC membership and our next call on the 23rd. So with that, we're going to pivot quickly and start on the legislative update. Melody.
Thank you, Ellie. If you can go to the next slide. Thank you. So it's been very, very busy on our end legislatively around working with several different congressional committee staff offices. The previous stimulus bill that passed in late March was just one of many, as you all know, and there's been continuous talks on the Hill about having another one. I think right now everyone has come to the consensus that there will be another stimulus, and the debate is around what the exact focus will be. Some offices have said that it would be a reload of the previous stimulus package, the CARES Act. Others said that it would be more.
Melody, I'm sorry,
Yes?
I need to interrupt you. I've gotten a few people who are typing in that they don't have any sound. So if people can hear okay, I would like to have you go ahead and type into the chat box that you can actually hear us. Okay, I'm starting to see that people can hear us. All right. It's kind of looks like a mix. If anybody is on the line and you cannot hear, you should sign out and try to call back in again. Okay, go ahead, Melody.
Okay, thank you. There's some different consensus where it would either be a reload of the previous stimulus bill, the CARES Act, or it will be an expansion of several different proposals that were suggested throughout Congress, but in particular the House Dem side of expanding on what was already previously built. So for instance, the rebate that was given to several Americans starting on Wednesday, whether direct deposit or mailed, which was the $1,200 per individual, $2,400 for joints, and $500 per child up to 3 children. There have been some proposals to expand that. There have been proposals to expand on the Small Business Relief Fund, as well as expansions on just different programs. A lot of concern also on additional stimulus is on addressing the fallouts from the quarantine and shelter at home policies as a result of the virus. So all those conversations are happening. We're hearing now that Congress won't even reconvene until early May at the earliest. So there's a lot of movement happening, and it's a lot of moving pieces. But what NHRC is hoping is that throughout all these conversations and negotiations that we're making sure that people are thinking about and talking about housing counseling funding through this pandemic, and that in any upcoming stimulus package, whether that focuses on infrastructure or reload of the previous one, or fallout addressing or whatever, that we can get housing counseling language included. We've already floated some of this language around, but a lot of it is up to negotiation on funding levels or specific exact language that would be included, because obviously we're working with conflicting priorities between the House and the Senate and the Dems and the Republicans. But ultimately, our major goals for any stimulus package would be an increase in funding. So many of you know that at length we've been talking about fiscal year 2021 funding. Obviously, that number is going to have to be addressed given the nature of the housing market now, post-pandemic. So we're absolutely pushing for a higher number, and I believe there is consensus on a higher number, but not an exact number. There have been some proposals where the funding for housing counseling has been very high, which we're happy about, but then it becomes an issue on capacity and how much money groups can actually absorb in a given year. But beyond funding, something that we are getting a lot more consensus on is the expansion of use of funds. So currently counselors are sort of locked in on how they can use their money, and given that many, if not all, housing counselors now are working remotely, they need to be able to have more flexibility in how to use their money so they can still continue operations. So expansion of use of funds to include things such as, this is not a complete list, equipment, technology, and outreach. Those two major goals are our priorities. Obviously, we're having those conversations. Our goals may change. We'll obviously update our membership in the field if anything else comes up from that. Ellie, next slide. Thank you. So who are the officers that we're talking to? Yes, we love that people are very engaged with their legislative members, but the crazy thing about stimulus is that given how Congress is not convening in Washington, what a lot of people on the Hill are trying to do is get as much consensus as possible prior to introducing a bill so they can do a unanimous vote on legislation and move it more quickly and not have to deal with hours, if not days, of debate. So a lot of the decision making has been solely on leadership positions throughout Congress. So some of these names will sound familiar. Senate Banking, which oversees housing on the Senate side, Chairman Crapo and Ranking Member Sherrod Brown. Bruce and I had a really good conversation with Chairman Crapo. His staffer was very receptive to a lot of what we were talking about. Obviously, a lot of things are very open right now, but we feel good about that relationship and we plan to check back. House and Senate Appropriations that oversees the Transportation and HUD subcommittees. So the usual suspects, Chairwoman Collins and Ranking Member Reed, as well as Chairman Price and Ranking Member Diaz-Balart, who some of you may have known, got coronavirus and was put on a 2-week quarantine himself. We had a really good conversation with both the staff of Collins and Reed. They often work together on legislation, which we greatly appreciate. And we have really good conversations with Chairman Price's staff, Sean Maxwell, and his committee staff, Rebecca Saleh. What's very interesting about the conversations we had with House and Senate Approps is that in the middle of all this pandemic madness, they finally got allocations for fiscal year 2021. So, well, on one hand, we're prioritizing COVID-19 response and trying to get funding for that, but separately, on the other hand, we're back on the fiscal year 2021 train, and so we got some reassurance, preliminary reassurance, that there are two separate conversations, that we shouldn't have to worry too much about, if at all, about if we give a significant number of funding for COVID-19 housing counseling, that fiscal year 2021 monies would be significantly lower. We do not want a fiscal year program cut. But obviously all things are changing. We're all getting new information as it comes in. So we'll keep everyone posted on that. But overall, we're having really great conversations. The best conversations we've been having have been with Chairman Waterstaff at House Financial Services. They were very supportive of housing counseling. They are very supportive of a significant increase in housing counseling funding towards the pandemic due to the risk of evictions and foreclosures across the country. We've talked to their office about expanding the use of funds and the funding increase, and they were very, very receptive. So we're keeping them posted on our different conversations, and we're really excited to have them as a partner in the House. All these offices are really important, but we want to be very clear. Most of the stimulus decisions and negotiations are being done on House and Senate leadership. So between Speaker Pelosi and Senator Schumer and Mitch McConnell, who lead the respective parties in the Senate, we've been working on reaching these offices. As you can imagine, they're kind of harder to get to. But we are persistent and adamant in reaching out to them and getting them to understand the importance of housing counseling now more than ever, and the need for legislative language for housing counseling in the stimulus. So forgive me, that was a lot of information at once. We'll continue to update people via email and our weekly Leaders in Housing counseling calls with more information as we get it. But right now there's a lot of moving pieces and a lot of conversations being had. Nothing's final yet. So unfortunately, that's the most I can report for now, but I hope to have more to report next week. Thank you.
Excellent. Thanks a lot. Lots going on, and we're very glad that Melody's in the middle of it all. Let's move on quickly. Next slide. Whoops, it looks like we missed a couple steps here. So let me just do a couple things before we dive into the individual servicer conversation. So we are so on the latest on certification and on the NOFA, they're not allowed to tell us when something's about to happen or when it's coming up or what the exact date is. But all the signals are that we are very likely to see a waiver on certification. And I'll just point out that when Brian Montgomery, the FHA commissioner and now deputy secretary, was on our call 2 weeks ago, he specifically cited they were well aware that there was a delay and that the counselor's ability to take an in-person test has disappeared because the testing sites are no longer available because of the crisis, and that the in-person training, the most effective training available, those trainings are not possible because of the crisis. And so continue to, I think we're very likely to see that we'll soon see the delay. We'll see a waiver on what the deadline is for the certification, and then for the NOFA, we think that they're ironing out the details, and that should be coming in shortly as well. So I know I'm getting these questions a lot, and I appreciate everybody's concern. I think the news generally has been good about things moving forward. So I probably said something like this a couple of weeks ago, but we continue to get the positive signals. So hopefully this all happens pretty soon. The other thing I wanted to spend a little bit of time talking about is just the communications with servicers. And this is obviously an instrumental piece of our work, and we want it to be as efficient and as effective as it can be for our borrowers and for counselors working with servicers. So the first thing I think is just the best practice that's really become clear in this time, which is that the telephone systems for servicers are under tremendous pressure, and that it's always going to be better if the servicer has an intake portal, an internet portal that's the first place where people go and connect with them. And some of these systems are quite automated now and sophisticated and are designed to match what the CARE Act provisions are. We're certainly very interested if there are places where they're not. So please let us know. We are really but the best practice is not to try to rely on the consumer-facing telephone numbers, but the intake portals as well, and to tell your customers that. We will have a list of those shortly, and well, actually, let me talk more about that. So we have put a lot of energy into trying to build a directory for working with servicers. So not unlike what we had built in the during the foreclosure crisis, and we're going to release a very early version of this, a beta version that we'll put out on the Leaders and Headlines listserv. This is only for use for counselors, because it will have counselor-specific lines that should not be made available to to the public and to consumers, but also not made available even to partners. This is really most of these are really just specifically for housing counselors, and we want to be sure that we don't overwhelm those lines with other people using them. So we will have the basic consumer intake portal on this. We will have the counselor communication lines, and then hopefully we'll have escalation lines as well with a number of the servicers, so that if we're not able to sort things out, we can elevate them to a more senior person. And our plan is to try to get the first draft of this out this afternoon. We're going to do it password protected, and I will send you the password as well, so you'll have it, and hopefully it's easy to use. We would love to hear about places where it's not working, or things that we're missing, or if some parts aren't working the way we'd like them to. We have the ability to escalate some of those questions as well, and we will continue to get more information and add to the list, so it's a more complete list, and we will figure out how best to circulate this going in the future. So wanting to make sure you have the best tools available, and we will get that out shortly. So with that note, we're going to move to talking with the servicers, the groups that are in the field right now. I really appreciate the fact that they've stepped away from their telephones and the demands of their business to talk to us, and hopefully our conversation can help make this system much more efficient and effective, and so we can help solve the problems for many people. So at this point, let's start out with Ocwen Financial Services. So Ocwen NPHH has been a leader in working with housing counselors. We really appreciated their role on that. I'm getting somebody's sound in the background here. So we have Tamara Gifford joining us, who has been great at working with our housing counseling partners as well as other people in the field, and she's going to give us the viewpoint from what Ocwen is doing. And actually, I may add one more quick point, is that I said it's the beginning, but make sure that everybody knows. So we had FHA and Fannie and Freddie on a couple of weeks ago, and the idea was to talk about what's under the CARES Act. And so we're certainly interested in how the servicers are implementing that part, but we're also especially interested in private label securities, ELS loans, and portfolio loans, both of which were not covered by the CARES Act. So how they're managing those, and we're very interested in what their communication portals are that they're using to both for the public and for the counselors. And that information will also be on the directory for all the four that we have joining in with us today. So with that moment, so Tamara, can you hear me? I'm going to turn it over to you.
Yes, good afternoon. Thank you so much, Bruce. Appreciate being invited to this call. So I just wanted to cover that, you know, at Ocwen/PHH, we understand the difficulties that the COVID-19 pandemic is creating on mortgage borrowers, and we are working to do whatever we can to help our customers through this difficult time. On the slide, I just wanted to kind of go over some different slides to show everybody what customers will see when they go onto our website. We have several different websites. So we have our ocwen.com website, which is on the next page. On this particular platform, ocwen.com is really our main corporate page. But we do have a banner on there so that if folks end up on this page, that they can click and be directed to our main page that gives you more information on what we're doing. Also, on the next slide, you'll see we at our PHH Mortgage website. Again, we have a banner and a click ad so that people can go directly to get service on COVID-19, but the majority of our borrowers are going to go to our next website, which is mortgagequestions.com. That is the primary borrower website. And as you can see on there, there is in red at the bottom, there is a little link where folks that are affected by COVID-19 can click on that to get information. Now, on the next page, we have, this was as of March 27th, I believe. We had updated our page for what we were doing at that time. But as you mentioned, things are moving very fast. So this will actually be updated within the next week, but I just kind of wanted to go over what was there right now for folks. And it does talk about, some of the options that people have. So if you're affected by COVID-19, you simply just need to complete the form that's at the bottom of this page, and it's really just your name, your loan number, your address, and there's 3 specific questions. But we are offering, all of the 3-month forbearance plans as normal, and for the private label securities, the PLS loans and private label loans, we are actually doing the same for that right now. So anybody who is affected by COVID-19 can go to our portal, self-select that they have been affected by this pandemic, and then we will reach out to them. Our team will reach out to them to go over what the different options are. But in general, we are doing just a 3-month straight forbearance plan. At the end of that 3 months, borrowers will be contacted by someone on our team who will go over the situation with the borrower to see where they're at. If they need additional time, in some cases, we will be able to continue the forbearance. In other cases, it depends. We can talk about a reinstatement, a repayment plan, or a loan modification. And again, it all depends on that particular loan and who owns it. And if you go to and actually, if you just take a look at this page real quick here, again, as I said, we are updating our language. The feedback that we were getting from this is that a lot of homeowners were a little bit anxious after reading this because it says that the deferred payments are due at the end of the 3-month plan. And as we know, for a lot of folks who are struggling, if you can't make a payment now, chances are you're not going to be able to make 3 or 4 payments at the end of that time period. And so we are changing our language to reflect the fact that we are offering other options for folks and that they don't feel that the payments are going to be due right at the end of the 3 months. So again, our site will be updated next week, within this next week, to reflect those changes and make it a little bit user friendly or a little bit softer in our approach. We understand that this is a very stressful time for a lot of folks, and so we want to make sure that we're working with them and not adding to that stress. And if you want to flip to the next page. Again, the questions that we're asking on our portal are very simple: your loan number, your name, your email address, and then your property address. And then if you flip to the next page, there's literally just 3 questions that we ask. And the first one is whether or not you've been affected, that you understand. Oh, okay. So this is the one that you says that you understand that the forbearance plan is not, you know, not it's not a deferral, or it's not a free ticket for not making payments, that you do end up having to make payments. But again, we're changing the wording so that people know that there are other options besides that. So again, you can see that it's very, very simple. And so once you hit submit, then you're in the queue and someone will reach out to you. On the next page of the slide, this is all of our contact information. So as Bruce was saying earlier, folks can call in directly to our 800 number. They are likely to be on hold for some time period. We are, you know, working through that, but the demand is quite high, and so some folks are having long wait times. If they do not want to wait, they can also just email us at covid19assistance@mortgagefamily.com. We established that email address so that folks could just send us their information, and then rather than wasting their time being on hold, our team will reach back out to them. Or again, they can go directly to the website that we just went through. We still have our dedicated group to working with housing counselors, just like back in the housing crisis prior. You know, at Ocwen/PHH, we have a dedicated team to work specifically with our housing counselors. That team is still there and still available for you to reach out at the phone number listed there or at the email. And then if you have any escalated issues, if you're, you know, really frustrated and you just haven't been able to get the answer that you need, you know, feel free to reach out to me. I have both my my regular office number and my cell phone number, as well as email is probably the quickest though. But I am happy to speak to anybody who's running into some situations. So we have been, you know, really upfront as far as, you know, trying to get this information out to our folks, and, you know, responding to industry changes. As of last Thursday, so a week ago today, we have already approved over 66,000 forbearances for homeowners, and that has been increasing. We'll get our new numbers tomorrow, and I'm sure that will be up quite a bit. But we are definitely committed to working with clients and helping them through this tough time. So, and that's pretty much all I wanted to go through. I know, you know, there's some other questions as far as specific loan processes and stuff, and I'm happy to answer any additional questions.
Great. And so do we have some questions in the queue, Ellie or Melody?
We have quite a few. Okay, could someone mute their back line because I hear an echo? We have several questions. I'll just go through some. Question, are you saying at the end of, okay, really moving fast, sorry. Are you saying at the end of the forbearance that repayment modification or putting at the end of a mortgage would be based on the loan investor?
So at Ocwen and PHH, I mean, it depending on the investor. So for our, we will be rolling out a new plan for our PLS loans next week, which will allow for the repayments to be at the end of the loan. But the details on the details on that plan will come out next week.
Sure. Well, the borrowers have to provide evidence.
Yeah, because let me just follow up on that. So I think that we think of the state of the art, the best solution for people who when they get back on their feet again have the same income and are able to manage their payments, to have extend or cap and extend, or some FHA, the partial claim, but that it's without a penalty for that, and simply the payments. So if you had 3 deferred payments, that those then get added to the back of the loan with for 3 extra months, and that there's no extra like late fees or added interest. So is that given that there's some investor restrictions in some of the PLS things, is that the standard that you're going for? I think.
Yes. So we are, again, depending on the investor terms and stuff, we are going on the same standard of doing the 3-month forbearance, as well as not reporting any negative credit reporting, waiving fees, and that type of thing. And then as far as the missed payments, again, we are rolling out a program next week that will go into more detail, but we completely agree with where, with your thought process, and that's how things should be. And again, next week we will have more details. Like I said, things are constantly changing with this. But we are also updating our processes to make sure that we are doing what's best for the clients.
Yes, I'm going to consolidate these questions. Could you walk people through the process? 1, what documents, if any, they have to provide to show hardship? 2, how long do people have to wait before they hear back? And 3, how long is the actual forbearance? Is it 3 months or 6 months? Because people are hearing different things.
Well, at Ocwen, we are doing an initial 3 months. And at the end of the 3-month time period, our team will reach out to the borrower. And again, depending on the owner of the loan and stuff, we can renew the forbearance for 3 months if that's allowed in that type of loan. But we do have our team reach out to the borrowers to go over what the options are at that time for them. But yes, if a borrower needs additional time and the investor allows it, then they would be renewed for an additional 3 months. And then as far as what they need and stuff, there is no paperwork. We do not require any documentation. The website that we just went through is all they need to do. They really are just self-selecting. We don't require any confirmation. So it's really, we want to be able to help people quickly without having to have them, go through all these hurdles to prove that they've been affected, because we know that this has impacted a huge number of folks. And so this process allows us to just, help people as soon as possible without getting stuck on a lot of paperwork. Now, at the end of it, again, depending on the situation, if there are people that maybe don't qualify for some of the different repayment options and they need to apply for a loan modification, then at that point they would be required to do the regular documentation. But for your general forbearance and letting us know and all that, there is no additional documentation.
That's great, and I think very helpful, and glad that you're using it where you can in the PLS market too. Just one thing, I know that the standard for Fannie, Freddie, and FHA is that you can have multiple extensions if needed, up to 12 months. So I think we've been talking about a 6-month university. If the crisis requires it, are you all looking at going to 12 months if it's needed?
So we would change as the industry changes. At this point, we're doing it in 3-month increments. That doesn't mean that we wouldn't go past the 3 months. It's just we're selecting at this point to do it in 3-month increments.
Good. Okay, Melanie?
A few more questions. What if clients were already delinquent or in the process of how do I word this? Can we got a few of these? Basically, if someone's seeking forbearance but they're already delinquent, is that allowed? What is the process for that?
Yes, they are still allowed. And they would go through the same process that we talked about. There may be different situations, again, they're going to be allowed the 3-month forbearance, but on what their options are, it would depend on how long their loan's been delinquent. And again, that's where our team would reach out to them at the end of the time period to talk with them about what their, what options are available to them.
Thank you. Is there a deadline to request forbearance, like if they go into default in June, for instance?
At this point, we do not have a deadline for requesting it. I don't anticipate that changing at this point, since it's so up in the air on the situation is ever changing. But at this point, we do not have a deadline.
Thank you. What if a homeowner or a client has limited access to internet? You said that those people have to apply online.
Or they can call into the phone number. And that's why we understand that some people will not have access to the internet. And so we would hope that most people who do have access would email us or go to the website directly, and that would free up the phone lines. But otherwise, people can call in directly to our 800 number to let us know.
Thank you. And just to confirm, the maximum amount of forbearance extensions is what, 3 or 4 for private or non-government insured loans?
For private, it's hard to say. Again, it's going to depend on the investor, but we are working with our investors to ensure that they are working with homeowners in the best possible manner. And again, we understand the impact that it has on homeowners, and we want to be able to help as many homeowners as possible. But I can't say blanket, that it's going to be X number, because it depends on the investor.
Thank you. Why are servicers not asking them to consult a HUD agencies as they previously did, or are they going to give that information to them on their statement?
I'm sorry, I missed part of that.
This might be a Bruce question as well. Why are servicers not asking them to consult a HUD agency as they did previously, or are they still going to give that information to them on their statement?
So we are actually partnering with a lot of our nonprofit partners now and suggesting that folks schedule appointments with a HUD certified housing counselor. In fact, we're working with several organizations that will be holding informational calls directly for our borrowers, encouraging them to set up those housing counseling sessions.
Thank you. This is a question for Bruce very quickly. How many, given the pandemic and the deadlines, how many still need to be certified?
How many counselors need to be certified? Well, our understanding is we're halfway there, and so half the counselors out there have not passed the test yet. But as you well know, we're really encouraging them to push back the date of certification for a year at least. So we hopefully will get an announcement soon enough. But my understanding is that we're halfway there.
Thank you. Are they going to engage in MOUs with local agencies to provide funding for the counseling?
So are we talking about servicers, or are we talking about HUD? I bet they're talking about servicers and lenders. And
servicers.
Yeah, so actually, Auckland's had a long history of working with housing counseling agencies. Do you want to say a few words about that?
Sure. So we've been working with housing counseling agencies for quite some time, and we continue to do that. We believe that it is, it's essential that homeowners are educated on their whole financial picture, and that they have unbiased information, and feel that they have an advocate specifically working for them. We, again, work with a number of different housing counseling agencies across the country, and will continue to do so.
Thank you. Someone wants just a clarification, 2 clarification questions. One, if a housing counseling agency wants to partner with Auckland, who do they contact?
So if a housing counseling agency wants to partner with us, they can reach out to me directly at my email or give me a call, and I'd be happy to talk to them.
Thank you. Someone said that, will you provide the RMA form online to those who may need to submit via mail, because it's very difficult to find on your website now?
anyone who wants an RMA application can email me, and I'm happy to send it out to them.
Great. And then if someone else wanted specification, just to be clear, for private, is it 3 months? Is it for federally backed loans? Is it 3 months per increment?
So for the government ones, it's 3 month increments. On the private ones, it's an initial 3 months, and then it's monthly after that. Again, in this case, we would be reaching out to the borrower to every month to see where they are and what their options are at that point. But we would continue it if needed.
Thank you. For those who want to partner with Ocwen, who are housing counseling agencies, do they have to be certified?
That's a good question. I'm assuming that all of the ones that we work with are HUD certified. I don't know that we have any specific rule preventing. So if they want to reach out to me directly, I'm happy to talk to them.
I think there's a nuance here which it's worth pointing out. So HUD approves housing counseling agencies, so they're HUD approved housing counseling agencies, and now there's a HUD certified counselor program. So the question may be, do they have to have passed the counselor certification exam? And I would bet the answer to that is no, that what you've been doing has been with HUD approved housing counseling agencies.
Yes, thank you for that clarification. You are correct.
Right. So maybe one more question, and then we'll move on, and we can always come back.
I think we're good on questions. We can move forward.
Thank you. Okay, so let's move on to the next slide. Thank you. Okay, so Wells Fargo. So we have Hugh Rowden, and a mortgage lender in the country and a large servicer. We have a long history of working with them. Hugh, can you please give us your perspective?
Yeah, so thanks, Bruce. Well, I just want to make sure you can hear me okay.
Yes.
Okay, all right, great. I'm looking at the time. So I'm going to go through this probably in a little different way. What we've been focused on, and so what I would ask is just go ahead and just leave this cover slide right there for me. And then I'll let you know when to advance it. But what we've really been focused on is, number one, just making sure that we take care of our customers and their needs, as well as, our employees and our families. If you can imagine, this is a lot different than what it's been any other time. And so, again, health and safety of our team members, their families, and then in addition to that, taking care of our customer requests. I want to talk a little bit first about just the volume that we're seeing come in the door. So already we're over 700,000 requests for assistance. And, we expect that number to possibly reach 1 million by the end of this month. Everyone without any documentation that calls and says they're having challenges because of COVID-19 are automatically getting the 90-day, what we're referring to as payment suspension, because that's what it is. It is a forbearance, and we do have to work through all of the things on the back end of it, but what you'll hear us refer to is payment suspension. To give you an idea of that volume, in one day, we had over 100,000 calls and emails. And so as Bruce started out, we're asking that, 7 to 10 days, from the time that you make your request for us to be able to get back with you. Now, keep in mind, a large majority of these have been coming in online. So if you go to COVID-19, you can just go to the wellsfargo.com site and put in COVID-19 if you don't have the direct email link, or you can simply do wellsfargo.com/mortgage assist, and that will also get you there. but we have special COVID-19 pages set up, which address all of the different things that we're doing, whether it's a banking-related issue, a small business issue, or a home lending issue. In addition to that, on that site, what you're going to find is FAQs. These FAQs are designed for customers, and it helps customers understand what they need and what they need to do and the steps that they need to take. I do want to talk a little bit about some of the work that we're doing in the company as it relates to housing counselors and helping to support the industry. And so from the foundation perspective, we knew that we needed to get ahead of this pretty quickly. And so all the local community affairs managers and community development managers that are spread out across this country have been given flexibility to, to direct the funds to COVID-19 related activities. Now keep in mind, our three priorities are housing affordability, financial health, and then also small business. And so our leaders are working really hard to make sure that they're aligning their giving to the needs that are in the community. In addition to that, Eileen Fitzgerald and her team on the housing affordability, which I actually sit in that team as well, are working hard to make sure that we're addressing the needs of housing counselors and intermediaries across this country. So $175 million is what we have committed to go to COVID-related activities, and that work is well underway. I want to kind of address some of the questions that I really heard being asked by Ocwen, because you could ask that of Wells Fargo, you can ask that of any other servicer out there. Yes, there are slight differences depending upon the investor of the loan, but what's most important is that we make it as seamless as possible as people reach out and they have challenges. There are some things that we'll have to figure out on the backside, and I think everyone's working on doing that in a very unified way. I just want to talk about our book of business for just a moment, because it's very different than what we saw during the housing crisis. And so today, only 2% of our loans that we have, that we service, are private label security loans, only 2%, where before we were we were about 11% of our total portfolio at that time. And so the great thing about that is that the others are basically GSE loans. The Wells owned loans, we will service them just as we'll take care of them and approach them in the same way that we do the GSE loans. So upfront, 90 days, engage with the customers, understand their hardship. Just like during any other modification time, you have to understand the hardship. Is it a short-term hardship or a long-term hardship? Because that will help guide the next steps and activities that we're doing. What we're doing now is that we have some relationships that we've been working with for almost 10 years now that have a dedicated team that they send files into, and those files, and so they have more of a direct relationship. But we will work with any housing counselor who has authorization to speak on that customer's behalf. And I'm trying to think about what else is key here as we're moving through our time. But the big thing that I would encourage every housing counselor right now to do is that to leverage our websites, leverage the Wells Fargo Assist. There's also the nonprofit counselor portal that we have that's out there too, where you can get documents, you can see videos, you can access the loan tracker to see what the status of the loan is. And then also you get resources like knowing who to call and having the contact numbers. And so, Bruce, if you go to, or Ellie, if you go to the resource slide that's on this deck, it's going to highlight some of those resources that you're able to use. And go some more. right there. Okay, so all of these sites are going to be really important. The Wells Fargo COVID-19 site is in English and Spanish, so they can toggle back and forth. I already talked about the wellsfargo.com mortgage assist site, and then the nonprofit and community support site, which is more of a housing counselor focus site with documents and other tools and stuff that are available. You can also find a hyperlink to escalation contacts. And so there's community outreach consultants that are responsible across the country. One of the reasons why I don't want to just continue to send a flyer out or information out with that is because, you know, we're focused on taking care of our customers right now. And so that means all hands on deck. If we need for our team members to, we have several of them that have raised their hands and said, hey, look, I'll take on customer calls. If I need to do something like that, it's always best to go to the website to make sure that you see who your contact is, because I may need to adjust that based upon, you know, some immediate actions that we may need to take over the next, 60 to 90 days. And so the site is going to be your friend. There are contact numbers there. There are, there's a number for housing counselors to contact, but right now we wanted to make it just as easy for our customers to get the assistance that they needed during this pandemic. So let me pause there, because I know we only have a few minutes left and there's one more speaker to go, and see if there are any pertinent questions.
So, and Hugh, before we have two more speakers to go, actually. But so you gave us a map of the United States divided up into divisions to show where people are. Is that map on the website?
It is. It is.
So
that's the document that I'm talking about, because if we should need to make a change, then you want to make sure that you go to the nonprofit and community support site that's shown on the screen there, because that will have the most current information. In addition to what you're going to see loaded there is we've taken a list of questions. There's about 20 questions or so that are housing counseling questions, the way that your members have asked them. And we've put the responses to those. And so we will keep that FAQ updated on that site. It should be loaded any moment now. And so having that FAQ will also answer some of the questions that I even heard just a few minutes ago.
Okay. So, Melody, questions?
Sorry, I had to go off mute. Just give me one moment. So many. What is the address to the Wells Fargo Housing Counselor Support site?
You can go to it one of two ways. You can go to the wellsfargo.com/mortgageassist, or you can just go to the wellsfargo.com page and type in nonprofit and community support, and it will take you to that site.
Great, thank you.
I'll also send the detailed link. I'll also send the detailed link to Bruce so that he can send that out as well.
Good. So
okay, another person did ask about.
It'll go out in the directory. Go ahead.
Yes, another person said, how do counselors access the counselor support site? Viewing the link does not help. I'm not sure.
Okay, well then, if the resources on the site are not helpful, on the counselor support site there is an 800 number for housing counselors to be able to use, and then in addition to that, there's a geography map with community outreach consultants. So 8 additional resources that are spread out around the country that have state responsibilities. And you can always reach out to those community outreach consultants, and they will be that emulsifier between you, the customer, and the business if needed. And that is a escalation point for you.
Sure. Because housing counselors normally deal with a lot more than just housing, looking over someone's entire balance sheet, their credit, their other expenses. Someone asked if Wells Fargo is freezing or declining access to other online accounts when homeowners enter a forbearance with them. If you can just confirm that. Someone said they heard that from other banks and they just want to confirm if Wells Fargo was doing the same?
If you have I'm not aware of anything, but of course, anything like that, but of course it's not a space that I sit in each day. If anyone has a situation that comes up like that, that's another reason to go ahead and leverage your escalation points. In that way, it can be addressed. Keep in mind that also on the wellsfargo.com site, there are resources, the Wells Fargo COVID-19 site, there are resources that help with banking issues if a banking issue should come up.
Thank you. Will there be a dedicated
one question? Let me do one more quick question, which is on portfolio loans. So Wells Fargo has portfolio loans, and you mentioned earlier that you're trying to make this all seamless and invisible to the customer. But will we get the same protections that we would have had with a federally funded mortgage?
Yeah, we're leveraging. We're working with our portfolio loans the same way that the GSE guidance is. Good. I mean, there's small differences. There's differences. Let me just say this real quick. There's differences between an FHA loan, a USDA loan, a VA loan, a Fannie and Freddie loan, and a Wells Own loan, but they're so small. That's why it's so important that if a customer is having challenges, we want for them to contact us. We don't expect for you to be able to know all of the answers to all of the underwriting answers and what could or would happen. And we want to make it as seamless as possible. And so if a customer is having challenges, we really want for them to contact us and work with us so that we can help them with their individual situation.
Thank you. Will Wells Fargo have a dedicated representative assigned to a nonprofit who can assist with any issues about that may come up, like there was during the housing crisis?
Mm-hmm. Yeah, so we are looking at every option right now. I'm on, as a matter of fact, I'm missing part of a call right now as I speak. I'm on call every day with the servicing team. The servicing team is focused on the short-term needs right now, and then also at the same time looking at the long-term needs. And whatever it is that we need to do, if we need to pull playbooks off the shelf from the past, we're prepared to do that. Actually, we've already started doing it, and you'll see us start to pivot to some of those things. But it's all out there right now. We're still working with our fee-for-service relationships that have been in play now for, again, almost 10 years. And we're doing intake there as well. So, again, if you have a customer or you have a question, feel free to reach out to us.
Thank you. A lot of people are calling in, they get busy signals, and it's taking a very long time to reach somebody. Will there be an increased staff up in the next 30 days to manage call volume for people who are consistently reaching out?
Yes, we have been focusing on adjusting capacity across the organization. Now, I gave you an example of a terrible day, right? The highest volume day with over 100,000 calls, but that's not normal. It's much lower than that. And so we're taking, because branches are operating at about 90% capacity, even bank branches, we are converting some of those tellers and business bankers and a variety of other team members across the enterprise to help take customer calls. And so that's why, again, I want for you to make sure that you pay attention to the nonprofit and community support site, because even resources on my team are going to be helping out to help with calls and to help with call volume.
Thank you. Final question. Is Wells Fargo still putting the payments in suspension on the back of the loan?
That is the way that the CARES Act was designed. And yes, we're putting the payments on the back end of the loan, so cap and reinstate.
Great, thank you. That's everything. Bruce, Ellie?
Thanks, you guys. Listen, I was just going to say, I know this is a very, very difficult time. It's a very difficult time for everyone. And, I think the better we can work together, the better we're going to be for our community. I think the one big difference between now and what we had 10 years ago, we have some great lessons learned, and we also have to focus on embracing technology. We understand some of the technology challenges that nonprofits are having, and we're focused on trying to understand how to help out by doing unrestricted funds. But we want to work with you, and we'll get through this together.
I appreciate you saying that, and Wells Fargo Foundation has been very helpful, I know, to many groups and thinking about the broader questions about how to make this self-sustainable. That's the technology sessions. I was chattering away, but it turned out to be I was on mute. So let's move on to the next slide, please. There we go. So Dana Dillard and I worked together for quite a long time, and was very helpful in the early days of the foreclosure crisis. So Mr. Cooper was a nation star in those days, and probably many of you know Dana. So Dana, are you there?
I'm here. Can you hear me all right?
Oh, just beautifully. We're turning it over to you.
Okay, thank you. And I appreciate y'all having me today. I'd like to talk to you a little bit about Mr. Cooper, kind of how we're approaching the CARES Act and what we're hearing from customers, and then we'll talk a little bit about our PLS portfolio. So for those of you who may not be that familiar with the new Mr. Cooper, formerly Nation Star, we have about 4 million customers all across the country. We have mostly Fannie, Freddie, Ginnie loans and about a 10% private label book business. We're located in the Texas area, but have offices across the country, in Denver, in Chandler, Arizona, in Irvine, California. We have about 9,000 employees, and just like y'all, we've had to hustle up and get them all working from home. So all of our call center agents, all of our loan officers, everybody are working from their homes, and we were able to pull that off in a couple of weeks. So it's definitely been an interesting time, and so different, I think, from the 2008 period of time and what we were dealing with then. So glad to see that Bruce and I still have the energy to handle the crises of the market. I was doubtful about myself for a few days there, but I'm glad we're hanging in there. So that's a little bit about Mr. Cooper. What we've tried to do with our customers and enacting the new forbearance plans is, really with the customer in mind. If you go to mrcooper.com, you can look at our blog. Any customer obviously can look at our blog, and then you also can apply for your forbearance relief there. So it's just that you have to log in as a customer to see the form, but then once you get it, it's just a couple of clicks, and then you're automatically granted a 3-month. If you need a 6-month, we certainly can talk about that as well. Right now, we're running about 87% are getting a 3-month forbearance, and 12% are getting a 6-month. I think most people like us, just aren't sure what the next 3 months are going to bring, and we'd like to touch base and see what the customer situation is. But, the CARES Act says that if they ask for 6 months, they get it, and we're certainly being compliant with that. Let's talk a little bit about, let me just say this, a couple of stats that I find interesting. So far, we've taken through yesterday 164,000 forbearances, and of those, about 24,000 are on the PLS book. We like what you've heard from Ocwen and Wells. We're honoring the kind of the GSE playbook for the PLS portfolio. Some we have delegated authority, and so that's been no problem. Those that we have non-delegated authority, we're actually reaching out to all those private investors and getting the trustee signature to continue with the forbearance that looks like to the customer the same thing that the other programs are. So we're just trying to keep it simple. There's no docs. You just raise your hand for relief. We're trying to make as much online as we can. About 60% of our customers have submitted their forbearance via the website. And our plan is when we touch base at 3 months, that also will be electronic, where they can do that online, and we don't have to have people waiting in queues to call in to get additional assistance. So that's our plan. We already have a team working on that. And a couple of interesting things. Only about 25% of our call volume has been related to the pandemic, which I was kind of surprised by, to only 25%. And another piece that's interesting is that while we've taken 164,000 forbearances, we've had 350 plus thousand customers reading our forbearance page on our blog. So more than double of who've actually requested. So I think that may be a little foreshadowing for us. Of course, those include repeat visitors, or some are visiting with it, but it's still, there's customers thinking about it and trying to figure out, what they need in their family. The other thing we heard this week that's been interesting, and Hugh and I were talking about this the other day, where customers are asking for the forbearance, but then they're going ahead and making their payment. And we've had about 6% of the customers doing that. And I think that really shows the heart of your customer, where they might need the forbearance, so they're asking for it, but if they can make the payment, they are. And so that's been interesting for us as well. And we operationally have to figure out how we're going to handle that. And the way we're doing it now is that the customer gets an email that says, did you mean to make your payment? We show you're on forbearance. If you meant to make it, great, we'll take it off the amount owed. If you didn't mean to make it, send us a note here and we'll return it to you. So that's what we're doing short term, but we got to figure that out long term. And then another thing, so we have the blog, the website, you can get the forbearance requests. Obviously, you can call in. Our call volumes have died down a little bit, and the queues look a lot better with normal abandon rates. But it's a little bit easier, of course, to go online. We also did a video from our CEO out to all of our customers, and it's out on our YouTube channel, which is kind of frightening to me that we have a YouTube channel, but we do. And he talks about even, what a forbearance is, what it isn't, how we're supporting our call center agents as they support our customers. And I thought it was a really nice touch and kind of shows the heart of how we're approaching things. And then we also ramped up our social media approach, putting information out in Facebook and out in Yammer, or internally in Yammer, but in Twitter, and responding to customers actively there. We've ramped up that team and getting them the information they need to quickly resolve their items. In fact, I saw yesterday on our Facebook page, we put the CFPB video out there. I'm sure you'll have seen that describes the different options for customers. Again, just another tool to communicate to our customers to try to make it a little bit more simple. And I guess our biggest challenge, I would say, is making sure that we have a consistent tone across all the ways we talk to our customers, what they're hearing in the IVR, what the agent is saying, what the letters say, what we're putting in social media, what the website says. It's a little unwieldy for us as you start making changes to make sure you have that same tone and language and approachableness, to our customers. So that's something internally we continue to discuss and just try to get better at. And as you heard earlier, things are changing quite quickly. So there's just lots of everyday discussions about what have we said this way, or we heard pushback on this, so maybe we could say it that way. And working obviously with Fannie and Freddie and Jenny on consistency. I don't know if you saw, Fannie and Freddie came out with some scripting just yesterday, how to talk about forbearance and then how to talk about life after forbearance. And so we're, as we speak, grabbing those scripts, comparing them to our scripts and seeing where we can be better. So it's going to be an evolution, and y'all know at the end of the 3 months, at the end of the 6 months, we're going to have these hurdles and these milestones we'll need to work through together. So with the next slide that you'll see, we put our contact information for y'all, where it has our community partner. So this is before our customers. That is a hot link that goes to the actual form that customers can fill out. There's our customer service number and our hours. And then the next slide has the information for our housing counseling partners, the email box at community partners. This 800 number comes to a very small team that's there just to support the counselors. Fax number for those of us who are still using fax, and then our phone numbers. And then Taniqua Green on my team will be your point of escalation. If you feel like you're not getting what you need, please just drop her an email, and she'll be happy to assist you. Okay, that's it for me.
Thank you, Dana. Melody, do we have questions? And I'm not hearing you, Melody.
Yeah.
Mute.
No, I was unmuting myself. Forgive me. So let me see. How are you guys incorporating housing counselors?
You know, we were talking with Bruce just as we were making phone calls to agencies that we've worked with in the past, making sure that they know about our contact information. To be honest, these numbers have been really dormant. They've been there, but there's just no activity on them. So that we're just opening up those channels again just to see, you know, how we can partner together. So it's just really getting ramped up, you know, just as this whole pandemic is rolled out. So it's pretty new. I'll continue to work with Bruce and our other partners just to see, you know, what would work best. So we're open, but just getting started really to renew everything.
Thank you. Is the forbearance available for borrowers with tenants in the property? For instance, the tenant is experiencing financial difficulty and cannot pay rent.
Yeah, these programs are really for the mortgagors, you know, because the renter will pay the mortgagor pays us. So these programs are really for the mortgagors. I know there's other discussion, and Bruce, you probably know more about this than I do about programs for renters.
Well, there are. I mean, unfortunately, it's a moratorium on evictions. I think, as Elliot pointed out and others, that the real issue is it would be good to get people rental payments, because it's different than a mortgage. You can't put it on the end of the term of the lease because you still have rent to pay at that same time. So it is a much different vehicle to do this. One of the areas that we are paying a lot of attention to, and we'll do a call in the future, is on the new unemployment. And for many people, but not all, they'll get a $600 extra a week, and that'll help get some people through this and be able to make those payments. So we're very interested in making counselors unemployment experts. And I'll just make a quick plug that if you are doing unemployment counseling now, please take a moment to send out a voicemail, a plea to people who are experts to communicate with Ellie, so that we might be able to incorporate you into the next session we're doing on unemployment.
Thank you. What will your company do at the end of forbearance? And how will you be treating that forbearance period? Will hardship documentation be required to help?
Well, we're following the rules like everybody else is, the Fannie, the Freddie, the Ginnie rules. So it'll be the same for us as what you've already heard. If they ask for 3 more months, they get it up to 6 months. And then depending on what's going on with them, if they're working, not working, want to stay in the house, don't want to stay in the house, then we'll have the various exit strategies that each of the investors offers. What we're hearing is that most of the investors are putting their kind of an enhanced deferral program up top of the waterfall, where you can put the payments at the back of the loan, and including the escrow piece. And then if the customer can make the former payment, then they just pick up where they left off. I think everybody would like that. It's low doc. The customers can understand it. It's easier for us to process by not changing the term. The mortgage doesn't have to be bought out of the pool this, and just lots of wins for everybody. So that's what we're hoping for. And we understand in the next 2 to 3 weeks we'll be getting more information on that.
Thank you. How are third-party authorization forms being handled?
I appreciate you bringing that up. This is the question we talked about the other day. So I think we're just going to do verbal, because it's just too hard to get a form and send it and get it and send it back. And so we actually pulled up our third-party authorization protocol, and we'll be using the verbal approach.
So can I just jump in on that one quickly? So that's fine if that's certainly a fine way of managing where it works. For some people, we are going to have the case, and the counselor is going to need to reach out to you, and might not have the person on the line. So we went back to dig up the old HAMP authorization, and we're going to trim it back a little bit to bring it into the 21st century. And so we'll have a form, and so certainly if counselors are using the form, we're hoping you'll accept that as well.
Of course. Yeah, we're happy to do that. We're just, whatever's easiest. Either way, we can do it. Yeah.
Great.
Would you be willing to sign the form through DocuSign? And will your third-party authorization letter be uploaded to the website?
Let me look away on
here's what I'm actually encouraging. Let me just try to push back a little bit on that. I think counseling agencies should use the form that they're used to using, and I'm sure it was HAMP compliant back in the day, and we'll circulate some version of the HAMP one that brings it up to date so they have something. I mean, it's really hard for counseling agencies to have a different authorization for every servicer, and so we were able to with that monster. I'm sure data was part of all that conversation way back in the HAMP days, and so we'll try to make a solution that makes it easier for the counselors by having something standardized.
Okay. How are you addressing people with limited internet access? Is there a different way to contact the customer besides online?
Yeah, they can just call us, and then certainly we'll be reaching out by phone if we haven't touched base with them online. Sure.
Will you be sending mailings to those who have not called or contacted online? Some borrowers are afraid to call servicers.
You know what, we're fleshing that out as we speak, what the communication strategy is going to be. But yes, we love to mail stuff. I don't know that people always love to get it from us, but yes, of course we will.
And then several people have asked, you just want confirmation. At the end of forbearance, they do have the option of adding the amount to the end of the loan or loan modification, correct?
That's what we're hearing from the investors. We're going by what the investors tell us. That's what we're hearing from the Fannie, the Freddie, the Ginnie Camps, and then we're mirroring that on the private label.
Okay.
I mean, there are other options, but I think there are other options, but I think we all agree that's the one that might work the best for everybody.
Okay. Yep. The final question was, could you just reiterate your third-party authorization thoughts again?
Okay, we're prepared to do it verbally, and then Bruce is dusting off the old form to send it out. And if it's more of a long-term relationship with the customer and you want to get the form signed and send it, then we'll put it on the account. So I think what Bruce's point is, let's all use, if we can get the same form, let's all use it. And so we'll be happy to defer to that and work internally to get that approved. So we have verbal rules as well. So we're just trying to make it easy.
Great, very helpful.
Those are all the questions.
Thank you so much. Cool. Okay, so let's move on. And we're interested in inviting New American Funding as a representative of we should move the slide as a representative of the non-bank servicer world that's also a lender. And so there we go. Thank you. So we have Patty Arviello, who's been kind of a terrific lender in terms of engaging with counseling groups and doing excellent work, especially in reaching the Hispanic community, and Roger Stouts, who is with their servicing. So Patty and Roger, I'm turning it over to you.
Hi, everyone. Great information, and it looks like we're as any size servicer united as one, it's like we're a big giant servicing entity serving the client exactly the way we set up and intended to do. So I'm a little different in the fact that we are the originator and seller servicer to our own book, right? So I don't subservice and I don't buy servicing. much smaller servicing portfolio than my counterparts on the call. We service probably about 130,000 loans, and 100% of those have been originated by New American Funding. What sets us apart, and I'm not sure that a lot of people know, I happen to be the largest minority owned lender in the United States. We are a top 20 independent mortgage banker as far as volume. I'm the largest woman-owned, minority-owned. And out of a passion for the Hispanic community, because I happen to be a Latina, we started really focusing on the Hispanic community roughly 8 years ago. And so a large percentage of our book is Hispanic clients. And we still continue, and one thing that we do need to discuss is with what changes are going on that are going to impact the Hispanic communities and any of the low to moderate communities that we serve in as far as lending going forward with the restrictions that are being placed by many lenders in the space and including the big banks. So I took a deep dive into our servicing. We have about 3.8% of our book in forbearance right now. 25% of the people in forbearance. So it's actually below the line of what we originate every month. So we originate around 30 of our volume every month is to the Hispanic client. So I didn't see any large disparities there, which I was really happy about. Because we're known to be a very high touch lender, meaning that the clients we've been serving have been a lot of manual underwrite, a lot of high touch lending. You know, I can't just throw them into a DU and LP and throw out an approval all the time. So as far as Fannie and Freddie goes, I have been told that we are one of the largest suppliers of manual underwriting, and those loans are performing. So I was really excited to see that during this crisis, because as everyone knows, anytime there's a crisis, the disparities in this country are glaring. And I want to say that I have good news in that I'm not seeing that in what we've been able to originate and be able to service. So I'm excited about that, and it really warmed my heart actually when I took a deep dive within the last 3 weeks. I'm going to turn it over to Roger in a second because he's our EVP of servicing. But as far as working with the housing counseling partners, it's me. I'm the one who has the relationships. I'm the one who sits on all the boards. I sit on the HUD advisory board. I've sat on the CFPB advisory board, Fannie, Freddie. This is my passion. It's what I do out of love. And I've been in mortgage lending for over 39 years. And so I've been doing this a long time. So what I started out as a passion purpose is turned into something that I care about deeply in this covering the Hispanic clients has been something that has been very successful in our company. And, but there are other issues that are going to come up. I've been working with NAREP and with Mortgage Media, and we are now coming out with a website that's called No Pierde Su Casa. Because what I'm seeing again is no one understands what forbearance means. They have no idea. I think one out of 10 people in the initial period of this pandemic were calling, and once we explained to them what forbearance meant, they're like, oh, okay, no thanks, I don't need it, I can make my mortgage payment. So Roger will touch a little bit on that, but I really think that information is key to the minority and the LMI communities, and the more that we can get out there and with our housing counseling partners, the more we can get there together with our big banks, our big servicers. This is where I think that the critical need is simple understanding of what does this mean to me and in my own language. So I'll go ahead and turn it to Roger, and Roger can kind of talk you through to what we're doing with our clients and our partners.
Thank you. Just so whatever, as Patty said, a majority of our loans that we originate ourselves end up in the GSE book, about 98%. There's a few others, and I'll talk about those, how we're dealing with those here in just a second. Going back to mid-March, we began over 4 business days, basically emptying our office, sending all of our, like many of you said, taking care of your employees is obviously a very high priority. If we don't take care of our employees, obviously they can't take care of our customers. So we set about a very ambitious, in less than a week, had 96% of our staff out of the office, working remotely, including both call centers, both in the customer service world and the default related call centers, working from home in about 4 business days. An average day for us in customer service is about 800 to 1,000 calls a day. So I know that's a lot less than the numbers you've heard. Right now, starting in March 19th is when our volumes began to spike. We were seeing upwards of 2,000 calls a day. So we've been able to handle that. During those very first days of the spike, we averaged about a 30-minute hold time. So we felt like, we were doing pretty well. So today, as of today, our hold times are typically less than 10 minutes, closer to 5 minutes. And as we advertise to our bars, call us on Saturday. You won't have to wait at all. Our Saturday hours are great. We're fully staffed, and customers do not wait on Saturdays. And part of the things that we realized quickly, as others have as well, is that we needed to divert the phone calls. We needed to give people another way to we had to relieve that bottleneck, if you will. First thing we did, if people were going to continue to call, is on the IVR, we put messages very upfront. If they're calling about COVID, COVID-19 related assistance, here's the website to go to, and it will walk you through what you need to do. So we're trying to siphon off calls to keep the wait for those who wanted to talk to people or absolutely needed to talk to people, the wait a little bit less. We also created the web page, which you see the link to there. It's our internet portal. Basically, we asked that they sign and print a document that says they are experiencing hardship. That's all they have to do. They can upload it right there. We can DocuSign it right there. And as well as, as we've come to understand, there's a lot of scammers out there. We also make sure that, that our borrowers are aware of those scams that are out there. In addition to trying to communicate with our borrowers, we do email blasts to our borrowers, also explaining to them that they've been impacted. Here's the website you can go to and get assistance. We've also included information on our monthly statements that we send to the borrowers. So we're trying to get the word out as much as possible, and it seems to be working. After discussion with agencies, as a side note, in March, after March 17th, we suspended all outbound calling with regard to collections calls with default or any welcome calls or anything. We focused solely on the inbound calls. So we suspended any type of collection calls with the blessing of the agencies. Let me see here. When customers do call in, when they want to talk about forbearance, we initially offer the 90 days. If they insist upon 6 months, we absolutely give that to them. Even if they do 6 months, we're going to recontact them at the end of the 3 months just to check in and make sure the situation hasn't changed. Has it changed? Because a lot of, and someone mentioned it earlier, when we talk to these borrowers, a lot of them, first of all, it's all about education. We have to educate the borrowers based upon what they're hearing versus reality, and sometimes it's very, very different. And we talk about forbearance does not equal forgiveness, and so we want them to understand. So like Patty mentioned, after talking, to the borrower, a lot of them say, I really don't want that. I can make my payment. So I was just checking in to see if there was anything I was missing out on. We've had numerous borrowers calling in just saying, offer me your best deal. What's the best deal you're offering today? And so it's those kind of calls that we're dealing with. But it's all about education, and educating the borrower. We do not require documents. We do, in the course of the call, basically go over what the options are as we understand them today, which are full repayment of the missed payments, creating a repayment plan, doing a loan modification, or if there is an option based on their investor of putting the balance at the end of the loan, we discuss that with them and let them know up front what they're going to be looking at in 3 months when we call to check on them. And so we also encourage borrowers, if they can make a payment during the forbearance period, make a payment. It's only gonna lessen the bucket that we're gonna have to deal with when they get back to work and we have to do something with the missed payments. It's just going to reduce the bucket. Today we have, and again, this will sound small to the other guys who have spoken. Today we have 5,902 loans on forbearance plans. About 58% of those are Ginnie Mae loans. And as someone mentioned earlier, we see a lot of this as well. Borrowers using this as more of a safety net versus a real need today. It may turn into a real need at some point, but today a lot of them are using it as a safety net. So of the 5,902 customers who are on forbearance beginning in April, 25%, 1,478 have already made their April payment. So we are seeing a lot of people, again, using this, as a safety net. And like Dana said, with regard to Mr. Cooper's policy, if we have a borrower that calls in and say, oops, I didn't mean to make my payment, I have lost my job, can you give me my payment back? And we are. So we process those and get the money back to the borrower as quickly as we can, and usually that takes 2 business days, but then we put them on a forbearance plan after that. So our goal was, in the beginning, as we saw the phone volume spiking, was to divert that to emails, web, and having basically about 14 to 15 hours a day people working that box. Right now, our turn time for things that come into that box is less than 48 hours. We get the borrower notification that they are on a forbearance plan. Here's the letter. Here's what it means. And so it's less than a 48-hour turn time. And like others have mentioned, we have taken a 3-month incremental approach. We want to, we don't want to put the borrowers, on a long-term forbearance plan when that may not be the best thing for them. And so it also provides us an opportunity for continuous contact and communication with that borrower. And right now, that's probably the most important thing is communication and a lot of it. And so we do set that up with 3 months, but we do roll it. We do not require any documentation if they need to roll the forbearance plan. Obviously, if they go into a more formal loan modification program, documents will be required. And so basically, all we're doing there is making sure that they can afford the loan modification as required by the agency. Escalations, we have not seen a tremendous amount. And as the servicing manager, in the past 30 days, I have seen or heard about 4 escalations, that the customer service reps could not handle. In that, basically, it's the borrower didn't like what we were offering. So yes, there's an escalation, but there isn't really a whole lot I can do about what we're offering, as we're offering exactly what we're being told by the agencies that we can offer. And so there's been a couple of misunderstandings and escalations as well, but it's really have not seen the escalations come to fruit often. Non-agency loans. So I said that most of our production is Fannie, Freddie, Ginnie. We do originate loans for housing agencies and a couple of correspondents. And again, it's less than 2% of our monthly originations. So on those, our customer service reps, the first thing they do when a call comes in, we find out who the investor is. And if it is going to be an investor that we'll be service releasing to within the next 30 days, and that's typically the time frame, all these borrowers were told at closing that their loans were going to transfer. So what we advise the borrower is we provide the name of the new servicer that they will have, because we cannot enter into a forbearance plan with them since they're going to be transferring, and the buyers of these loans do not allow us to enter into a forbearance plan. They want to handle it once the loan transfers. So, we look at those loans on a daily basis as the calls come in. We analyze them on a case-by-case basis. The customer care rep basically takes the message and advises us something. We'll be back with them in 24 hours. That's when we do the research, find out who we're selling the loan to and what they're advising us to do, provide the customer with contact information. And most of these buyers that we sell to already have their loans set up on the servicing system when they call, even though they're technically not transferred, and they can go through with them what their forbearance plan is going to be. So that's how we do with a very, very small book of our business. We have one small investor private label. And all we've been advised to do is follow Fannie guidelines. So there, again, it's a small book, but it's easier for us. We just follow Fannie guidelines, and that's exactly what they've advised us and exactly what we do. Who we have helped, again, I mentioned that we have 5,902 forbearance plans. Our total book of about 130,000 loans, and all of it is self-originated. And so we have helped, we continue to help all that call in. Again, we have given them, we want to give them and continue to give them as many avenues to reach us as possible. And right now we feel like that we have done so. And so, I'm sorry?
You just spoke up. We just didn't hear you for a bit. I didn't hear you for a bit.
Okay, I'm sorry. I'm sorry, say again?
You just spoke up for the last 10 seconds or so.
Okay, so do I need to start all over? No, I'm kidding. I hope not.
Right, no.
So basically, that's a wrap. If you've heard, again, operationally, we've been doing well. Operationally, we don't have many escalations. Operationally, we are focused on reaching out to the borrower as many mediums as possible, and so far so good. And again, I know our book is so much smaller than everyone else on this call. But we pride ourselves in, as the other guys do, we pride ourselves in walking the customer through and making sure that the customer understands exactly what they're getting and how it's going to work, and to make sure that the last thing we want to do is have the borrower be surprised at the end. And so we make sure in both verbally and in written form that they understand what they're doing. So, and again, like I said, it's really separating myth from fact as far as what servicers are able to do. So with that, any questions?
Okay, Melody. So Melody, we're not hearing you yet.
Sorry about that. I was typing, and yes. The biggest ones, this one, as counselors, it would be great to have an idea of what the slate of options are for clients with portfolio loans. Also, can investors be identified in the mortgage statement?
We don't have any portfolio. If that's a question specifically for me, New American Funding only has very, very small portfolio loans. Again, everything that we produce we sell. So portfolio loans. We do not provide the investor in the monthly statement. Initially, we send a letter when the loan is originated, advising them that their loan is a Fannie or Freddie. We do not today.
Thank you. Do you also offer an initial 3 months?
Don't you also?
I'm sorry?
I'm just going to say, but on the mortgage statement, it identifies as an FHA loan, doesn't it?
Yes, it does.
Yeah, so that's one step in this process for me to be helpful if we could get more information.
It will also identify it as a conventional loan as well,
which is a code for Fannie and Freddie.
Correct.
All right.
Thank you.
Right, so
does New America Fund? Oops, sorry.
Go ahead.
Does New American Funding also offer an initial 3 months?
We offer the initial 3 months, but if requested, we will go 6 months.
Thank you. If documentation is not complete, will you reject it?
We don't require documentation for the forbearance.
Thank you. This goes to all the servicers. Can you try to ascertain from the investors what they plan to do early on? This way, borrowers can start to prepare to navigate the next best plan, especially if they do not offer partial claims. That goes to anyone.
Well, from my perspective, the only thing that I have been advised of so far, we talked about the Ginnie Mae partial claims. We also have a program coming out in July for Fannie, which will be duplicated by Freddie, that will allow you after that initial forbearance period or any forbearance period to push 2 payments back to the end of the loan. So, but then again, we still have to deal with the forbearance part of the loan, but that's the only program that I know of today that's been officially rolled out.
Okay, anyone else? No? Okay. And then finally, Roger, when you say do what the agencies tell them they can do, can you be specific on who those agencies are?
I'm sorry, the agencies I'm referring to are we're doing what the agencies allow us to do, and that'd be Fannie, Freddie, Ginnie. Again, they all have different programs for forbearance, and then the options for relief after the forbearance period's over. So we take direction directly from them as the agencies.
Okay, great. Those are all the questions.
Good. Well, thanks everybody for this panel. I think this was very helpful. We will make sure that the information that you've got will show up in our directory. We are very interested in being able to make sure these channels work, where we have communication channels and escalation channels, and we'll continue doing that work. But thank you for being approachable and helping us figure some of these things out. We will certainly be in touch over the next few months as more of this develops. So I'd also like to say a big thanks to Ellie Pepper for putting this call together and for Melody for managing the call. We still are happy to take memberships in NHRC, and appreciate the fact that many of you are renewing, even though it might be a stressful time. We have the availability of the discounts we talk about, but really you support us because we do the kind of work that we're doing that allows us to do these calls, put together the directory, to provide resources and information for our counseling world. Please let us know what else you think would be helpful that you need. We're interested in being responsive and trying to figure out how to help agencies get through this time. We'll obviously be very focused on funding issues and opportunities. We'll continue to try to increase those with the federal government, but also in identifying other opportunities for counseling agencies. And we'll keep all this work going, and so consider joining if you haven't already. Our next call, and Ellie, can you help us? What's the topic for the next week? I don't have this in front of me.
Next week is going to be about unemployment insurance in the CARES Act.
Okay, good. So, we'll, and you've lined up one expert already. Who's that?
We have a member of the of NELP, which is the National Employment Law Project.
Good. And so we will start with that. And certainly, if you are deeply involved in counseling people on unemployment issues, please connect with Ellie so that we're looking for some people that might be giving us some experience on the ground of what it's like for housing counselors. But great, thank you everybody. We'll continue the series on a weekly basis and starting these at 1:15 to try to dodge the thing. I know some people have some trouble getting in, and thanks for being persistent in getting in. We had a really strong turnout again for this call. So keep the good work coming, and we'll do what we can from our end to support your good work. Thanks so much, everybody.
Thanks, Bruce.
Thanks.